Hi folks, another of the standard indicators here. I'm going to talk for a second about the moving average indicator. That's the moving average indicator. And what you see on here are both the simple moving average and the exponential moving average. The only difference being that the exponential moving average follows price a little bit more closely, and you can see that here the turns happen a bit more quickly than the simple moving average. These are both 55 moving average. The simple moving average and the exponential are both 55. So you can see that they again, the exponential responds a bit more quickly to price. So a lot of traders like to use the exponential moving averages for that reason. But the moving averages are simply trend following indicators. It really is one of the oldest indicators used by traders. They do not predict price direction, but rather define the current trend with a lag, the current direction with a lag, and they're averages, so they do just what they say. In this case, as I said, they're 55 bar lookbacks. So what the indicator will do is look back and average the price over the last 55 bars, and we'll plot it here, right? And it draws a line from one to the other, right? And as you put in another bar of price action, the 56th bar back this way will fall off, and once again you'll be looking at 55 bars of price action, and it will be, again, that average will be captured here. So as I said, people use moving averages in a lot of different ways. One of the ways is to, if price is above a specific moving average, then you'll only look for long entries, and if it's below, you'll only look for short entries. Some other people use the slope of the moving averages to determine the trend and which way they want to trade. I actually have on the site, I actually have a moving average slope indicator, which does just that and calculates it and plots it beneath the price action, so it just helps you stay on the right side of the market. So again, a very useful indicator, especially useful to me, because as I've said time and again, I really like using indicators to help me define the structure of the market, and then use other things to help me get into the market in the right direction, to try to take advantage of the way the market is currently structured. That's it on the moving averages. Again, the simple moving average and the exponential moving average, a couple of the standard indicators that you will find on any technical analysis package on any site that has charts at all. All right, that's it, guys. We'll speak to you soon.